How are you guys doing today? Today I'm very excited because I don't care who you are, what it is that you're doing. If in fact you start working, hopefully by the time you're 18, and you have a business or on a personal side, if you're doing anything with regards to making money and it's legally, you're gonna have to worry about taxes, right? Taxes is something that's inevitable. You can run from it, but you can't hide. Eventually, you will be caught. So today I have a great um, interview for you guys. I have Tiffany Heritage coming in. She actually personally done my taxes. And yeah, so let's bring in Tiffany. My name is Jay, and welcome to Ask a Debt Collector, a subsidiary of Clear and Strategic. Now, I've been in the debt collection industry for over 15 years. I've done it all, from management to owning 2 debt collection companies. Over the last 10 years, I've been the go-to guy for friends and family for questions regarding debt and credit. Now I want to be that person for you. If you have any questions, put them down in the comment section. I promise I'll answer those questions. Let's go. How you doing, Tiffany?
I'm good. How are you?
We are great. We are great. So can you just briefly give us who you are and what it is that you do?
Sure. My name's Tiffany Heritage. I own Heritage Tax here in Poway. We're a full service firm, so we're open year round. We do individual tax, business tax, estate tax. We do tax planning. We do tax specialties, payroll, bookkeeping, pretty much any aspect of your accounting or taxes we can handle for you. So,
Awesome, awesome. So I want to get into the first question. The first question that I have is something that I was taught many years ago. It wasn't by a tax professional, but this individual at the time I was just a 1099 employee, so I had to obviously there was no taxes coming out of my check, and so I basically asked him, "What am I supposed to do with regards to taxes?" Because taxes aren't taken out of my money at the time, and so he told me that put away 10% of whatever it is that you're making and you can be okay. Now I have a tax professional on the line. Is that good advice?
So it really depends. A 10%, I guess, is a decent starting point. But when you're self employed like that, the thing you have to remember is you're on your own for Social Security and Medicare tax. That right there is 15% of your income. So you have your income minus your expenses, you get your profit right there. 15% of that profit, that's automatically 15% Social Security and Medicare tax. So, on top of that, you also pay your federal taxes, and that's where it can kind of vary depending on how much income you're bringing in. It could bump you into a higher tax bracket. Tax brackets vary all the way from 10% to 37% for federal. And then, depending on the state you're in, you're also going to have state taxes. In California, varies from like 4% to 10.3%. So, an average business owner, if you're making $100,000 after profit, in a year, you're going to want to, hold aside probably a good 35% of your income for taxes, at least. So it can be tricky. It's not an easy answer.
Okay, so if so that makes a lot of sense. So as a 1099 employee, on the safe side, you're probably better off putting around 40% aside, and then I guess worst case scenario, once our best case scenario, once your taxes are filed, if it is a lower amount or whatever the circumstances, at least you have that cushion.
Right. And your tax preparer, once they do your taxes, I don't like to have my clients every year owe a big amount at the end of the year. You get stuck with penalties from the state and the IRS because you're not paying in enough money.
Right.
So, what we'll do is we'll give you estimated tax payments to make quarterly throughout the year so it's not as big of a hit to you. You kind of know what's coming and you'll get into a pattern unless your income drastically changes. You'll get into a pattern where really you're in a safe spot.
Awesome. So that makes a lot of sense. That's something I did not know. Obviously, I do not deal with taxes at all. And so that makes sense. But it's always so important to obviously have a tax professional. Another thing, when I was younger, in the beginning, obviously filing taxes, even with my business, obviously at the time I owned a debt collection company, I always thought it would be better to do taxes on my own. Not only that, but David, I'm gonna put you on blast a little bit. The guy who I actually bought my company from, I've been telling him for years. He makes a large amount of money, but he does his own taxes. So one of the reasons why people do their own taxes is they want to save some money. What would your advice be for an individual with a business who wants to save money and do taxes on their own? What would you say to them?
The best advice I think I've ever gotten about this thing is you can't be an expert at everything. So, me and my field, obviously I'm an expert. Now, could I go fix my own credit? Probably not. I would not know how that works. So, tax law changes so frequently and so often. We're constantly in classes updating us on new laws. That's part of a requirement for our license is that we stay on top of these things. And there's little tax cuts and shortcuts you might not know about that are put out there for small businesses. And sometimes those can be huge amounts. So, yeah, you might save $1,000 getting, doing your taxes yourself, but now you've wasted 4 or 5 hours of your time where you could be out making money at what you do. And really, if you handed it over to a tax professional, we might be able to save you even more than that in the long run. So you can only be good at so many things.
Very, very true. I tell people that all the time. You always have like DIY stuff that you can do on your own. The reality is, if you want to save yourself time, and the reality is money, because as a when doing taxes and so forth, the laws are constantly always changing. We're always seeing that with regards to every time we talk. When I speak with Tiffany, we're in a group called Team. Together, everyone achieves more. She's actually the president this term. But nevertheless, whenever she presents about taxes, if anybody knows anything about the government, every second stuff is changing. The next question that I want to get into is home offices versus like a brick and mortar and how taxes work in that aspect. So, can you explain to me in the beginning, let's say a person's just starting out, what would be a good reason to actually either work from home or start with an actual home, I mean, an actual office?
There's tax write-offs with both options. So it depends on what works for you and your needs.
Mm.
For me, I have clients coming into my office all the time. Do I want clients coming in my home every day? No. I have two dogs to deal with, my husband. I don't want to have those distractions. I want to be able to focus on what I can do. Um, and to have a place for everything that I need to store. Tax preparers were still a highly paper run business. So we have files, we have all these things, even though we try to go, more online and get everything on the computers. Your W-2s are issued in paper, your 1099s are issued in paper, there's paper. Um, so if you're a small business, if you don't have people, coming in and out of your home, if you do Zoom online consulting, then, save yourself that money of renting a brick and mortar, stay at home. Say you have, an office in your house. Your house is 1,000 square feet, 100 square feet of it is your home office. What you're able to do is take your total home expenses and that 10% that's your home office, you're able to write that 10% off on your business. As long as you're not already in a loss on your business, you're allowed to take that deduction. That would probably be the only difference really between the two. Paying a brick and mortar, rent versus your home office is a brick and mortar, your rent is deductible even if you're running at a loss. So versus your home office, that's not true.
That makes a lot of sense. And that's why you just have to hire a professional. So, One of the things that I wanted to talk to you about is preparing for taxes. Obviously, when you're first starting a business, typically we're not going to find a professional till tax season comes. But once you do that, what do you advise for a business just starting out? Do you think, with regards to saving money and writing off stuff and understanding that, is it a good idea to Google and try and figure out some of that stuff?
No. We see a variety of things. I had a client who started an LLC in Delaware because they read that that was better online, even though they're here in California. That just means that they have to file now in Delaware and California. They're not avoiding anything. But that's not what they read on Google. So I know it's hard for a lot of people to find a tax professional or somebody beforehand before you really start this business, but it's so much easier for us to advise you and start you on the right path versus you coming into us, like in that situation. Now I have to undo a Delaware LLC, do a new California LLC. Now there's an issue with the names. So it really makes sense just to talk to somebody before you start that business and find out too if an LLC is even really what you need to be. So, depending on the state you live in, LLCs are very different. In Delaware, they're very LLC friendly. There's just an annual filing fee, it's small. Arizona LLCs are free. In California, they charge you $800 a year to have an LLC. So, and there's also separate filings in California for an LLC.
This brings up a very good point because I've even had clients. One of the things I do is I help obviously build business credit. And I've had clients, I'll tell them, hey, make sure you get your LLC, you get your articles of information with regards to that, your EIN number, those types of things with regards to building credit. And I'll get people who are in a different state and they'll say, oh, yeah, I got my LLC in Wyoming or one of those states that, it's relatively cheap to do so, and you basically hit on it a little bit, but you said something about having to file taxes in that state with the LLC and where your actual business is. Can you explain a little more with regards to that and how that works?
So, my tax business is here in California. I file California taxes. Now, if I went and I started an LLC in Delaware, they're one of the most tax friendly states you can find. Because my business is run here in California and my sales are here in California, that means I'm automatically a foreign California LLC. So that means my LLC originated somewhere else, but I do business in California, which means I'm still, held accountable for all the same California LLC rules, even though my business is somewhere else. So it really doesn't save you anything. California is one state where they love their money, so they're not going to let you get away with this kind of thing. They're not too kind on that.
Once again, that's why you gotta have a professional, especially a professional that's gonna tell you that. The next thing I want to get into is, for business, how do we know which business entity to use with regards to the business? What makes sense? What doesn't make sense? Obviously, you hear about sole props, they're the cheapest. You have LLCs, you have corporations. What makes sense for the actual business entity that you're going to sign up for? How would a person gauge that?
So there's certain questions, I ask when I go through this with my clients. The first one is who owns the business? Is the business you or is it somebody else? Is it your wife? Is it a friend? Is it who are you running this business with? So if it's just yourself, that cuts out the partnership entirely. You don't need that. If it's with somebody else, especially if it's not a wife or a partner, or a husband or anything, if it's with someone you're not related to, or even maybe your sister or your brother, I always tell people, make sure you want to go down a legal route here. Make sure you get paperwork signed that you know exactly what's to be split, exactly what's to, put in per person. Most arguments that I see from businesses are more than likely brother and sister combos or sister combos, because as family, you're like, oh, I got you, no worries. And then, in 2 years when somebody's having an issue and then the whole thing blows up. So my advice to people is, even though it's your family, there's no harm in putting it down on a piece of paper exactly how it's supposed to be laid out. With something like that, you're looking at either a partnership or an S corp or a C corp. Um, so there's all these little things that go into it. If you're by yourself and you sell toy trains, okay, you don't really need an LLC for that. You're not putting yourself at a big risk. So an LLC is basically an extra protection for you legally that separates the business from yourself if you were to go into litigation. Um, if you're building toy trains and selling toy trains, you don't have a huge risk of that unless you get really big and then warning labels and stuff. So it depends on who you're going into business with, how much money you're making, what the business is. Um, and there's just a lot of different options. So the most common mistake people make is when they start a business, they're really small. I see it a lot with consultants, either marketing consultants, um, personal consultants. They go in and they start this LLC, but they don't have a big risk of litigation. So really, they could go to their insurance company, get $100 worth of umbrella insurance, and they'd pretty much be covered. And it would give them more protection than an LLC does at a cost of $800 a year to California. So that's why I always say it's so important to talk to somebody about this before you start it. Because if you come to me with an LLC already and you don't even need one, now we have to do the paperwork and back that out, and it's going to cost you money. Not $800 a year money, but it's going to cost you something.
So
So,
I just learned something. Wow, that I never even thought about that. And I remember actually in our meeting today with team, not to be plugging team so much, but that's what you said. So an umbrella. I remember my ears perked up as soon as I heard that. Sometimes people are wanting, do a sole prop, and with the sole prop, you're sort of kind of exposed, but it may be not that big of an issue. And so by getting an umbrella insurance policy, $100, it'll even cover you better a lot of times than some of the other things. Wow, that is great stuff, and this is why I have Tiffany here talking to you guys.
well, and a common thing people do with LLCs, they make the LLCs, but they don't follow the rules of an LLC. So if they ever do fall under litigation, they just open themselves up completely. So if you have an LLC and your bank account for your LLC is your personal bank account, you've just ruined your entire LLC because it's called piercing the corporate veil. You have no protection now. So you're paying for nothing. So there's all these little rules that come into it. And, I do want to make sure my clients are protected. I do want to make sure if anything ever does come up that, you know, they're protected, their family's protected. That's their livelihood is my livelihood. So yeah.
That makes a lot of sense. It's something you just don't think about. And that's why, once again, and I'm learning too. Don't get me wrong, I'm learning too. Even though I have her already as my tax preparer, that's the first thing that I did that was correct. There's just, you got to get a professional. It's almost like, trying to go get surgery. It's not looked at the same way. But if I wanted to get surgery on my knee, I'm not going to go to a pediatrician and get advice with regards to my knee. You have to go to that specialized person. And so don't try and save money, because a lot of times saving money, you're going to end up paying a lot more not doing that. So I want to shift a little bit. I've been seeing Tesla and this $7,500 tax credit. Number one
Hmm.
is, when they say a tax credit, does that actually mean you'll get $7,500, or is that deducted from your income that's made, or and so forth? And I know there's thresholds, so I don't want to get into thresholds, because I know if you make over a certain amount, married or not married, not going to do it. But for the people who fall in the threshold, maybe give the number for that, and then explain exactly how that tax credit works.
So this was a tax credit that went away for Tesla because they oversold their capacity. And now they've brought it back, and the rules are insane. Um, the battery has to be built, 10% here. They have all these rules on where the battery's built and how the car's assembled. So the easiest thing people can do is actually on the IRS website, there's a VIN tool check, and you can take the VIN number before you buy the car, take the VIN number and punch it into this IRS website. And they'll tell you whether or not that specific car was made to where it qualifies for the credit. So that's how complicated the new credit is. So number one, definitely do that. So tax credits, they, typically if you have no income and you file a tax return, a tax credit's not going to do you any good unless it's refundable. I don't believe the new Tesla one is a refundable credit. I think it's a non-refundable credit, which means to use the full credit, you have to have $7,500 of tax liability. So, if you have a W-2 job, you make $150,000 a year, your tax bill, at the end of the year, not what you have to pay, but the total tax that is owed, that you've paid through withholding everything is like $20,000. 7,500 it's going to come off that, and now you're only going to owe the remaining 12,500. So it kind of works a little bit different, but also income levels, if you've claimed the credit before, that affects it. So the number one thing to do though is make sure you're making money to get the tax credit. And the second thing is check that IRS website, the VIN tool checker on there to make sure it qualifies.
Perfect. And so what I'm gonna do, and I put a note down here, is in the comment section. I'm gonna actually put the VIN tool check. I'm gonna put the link to that so that way you guys can check for doing that. I've been thinking about getting a Tesla. After hearing what you're saying, I'm just like, oh, it's crazy how they advertise it. Like, oh yeah, I mean, even when you're about to buy the car, they say 7,500 tax credit, and they sort of kind of adjust your numbers that way. And they give you a little bit of information, like, hey, if you make this amount or this amount, you might not be able to get it. But for the most part, your average American will be able to be approved for that. But you're saying, you just gave me some stuff that is like, whoa, 10% here if the battery's built, all this stuff to cut through a lot of that. Use the VIN tool check. I'll definitely put that down in the comment section so you guys can check that out, depending on what type of car you're buying. And then another question, like a B part to that. So let's say you did my taxes and I was expecting to get back $7,000. And this was just off of dependents and so forth with regards to that. And then this $7,500 tax credit from Tesla, would that increase that amount depending if I fell under the threshold, if I checked the VIN and all that stuff was cool?
Not necessarily. So if you're already getting all of those deductions, most likely your actual tax liability is pretty insignificant. Um, so if your I have to double check if this is a refundable or non-refundable credit. I'm pretty sure it's non-refundable, but if it's a non-refundable credit, all it's going to do is wipe out your tax liability. So if you have all these other refundable credits, like the kitty credit, those things, say your tax liability only comes to $100, that $7,500 is just going to wipe out that $100. So it's, not really a huge benefit to you. You're not going to go get that cash from the government if you don't owe them that money already.
Wow. So that makes a lot of sense. Here I was thinking, oh yeah, guaranteed extra 7,500 on top of that. And that's why you have to. I mean, if you guys have noticed, there is a theme here. I probably should throw it at the top. Got to contact a professional and talk to a professional. That way, instead of thinking, because a lot of people, including myself, already have in your mind where that money's going to be spent, and then to come and file your taxes and find out you ain't got it and you probably already spent it expecting to get it. That's why, again, you have to talk to a professional. Um, Last question I have for you, Tiffany. Thank you for obviously taking time out of your busy schedule to actually speak to me and the audience. The last question that I have, Just, and it's a general question, you may have to think about it, but across the board, as a small business owner, what is a tax savings tip that a lot of people don't really think about, that unless you contact a professional, that they will be able to tell you with regards to your taxes?
Thing that I see, most common thing that I see every single day with small business owners is they do not have a separate savings account or a separate checking account for their business. And when you don't have that card in your hands, every time you buy something for the business, this is for the business, this is for the, you don't realize how many expenses you miss through the year. And at the end of the year, going back and looking at your bank statements, you're not going to see it. You're going to see a charge for Panera, and you're not going to remember if that was with your family, with your friends, or if that was a business client. You don't remember those things a year later. What were you doing in May of last year? No
Right.
idea. But so that's the most common mistake that I see, and how most deductions are missed because people aren't separating, those items. And it's hard being a small business owner when you start out. You don't have a lot of cash flow. That's an issue for you. You can't necessarily separate it. So a lot of times, what I'll tell my clients to do is, even, if you're a sole proprietorship, or even if you're an S corp, LLC, get a credit card, even if it's in your name at first. That's fine. You can still intertwine these things in the beginning. It's fine. But get one credit card, use that only for business. Only business on that credit card. And that way all your expenses are right there. And that way, if you need the income coming into your personal account, you have that. You can see your business expenses racking up. You know what you have to pay. You can kind of balance that out, set that money aside, make your payments to it however you need to do. If once a week you pay it off, that's great. Once a month, whatever works for you personally. But somehow get that separation in there, so you're not stuck highlighting statements at the end of the year and trying to find receipts in your car. And you know so many deductions get missed that way. And I think on average, people that actually do separate it and have a better tracking system for it, I'd say they probably on average save about 20 to 30% more than people who don't. So
Wow. Wow.
you don't think about it. If you're
No.
at Walmart and you need pens, you buy the 5, 10, $20 pens, you just put it with your stuff, you don't think about it. You're not going to remember that a year later. And
Right.
that $10, $20 a couple times a week, that really adds up.
Yep.
Um, so that's one of my best ones. And the second one is, don't listen to the solar people that call you about the solar credit.
Mm.
Similar to the Tesla ones. Um, I've had people lease solar, and the solar company has told them, you qualify. You don't qualify if you lease solar. You only qualify if you buy the solar outright. So now you can finance that solar, and then you would qualify for the 30% solar rebate, which is a great rebate if you live in California. Pretty good one, especially with our electric prices. But these companies that are like, oh, you get it for free. The government's, they're not paying for it. They're leasing you solar, and you still have a monthly bill, but what they're saying is they expect that what you get back from the electric company is going to offset it.
Right.
Um, so it's not free. If you are leasing it, you don't get the solar credit. The only way to get that is to buy it or finance it.
I want to reiterate, she can work. So I know that on my YouTube channel, I have people all throughout the United States. She say nationwide and the world. I recommend personally that you do use Tiffany. But, and I'm going to put this down in the description, but how do people get in contact with you, Tiffany?
You can go to my website. It is www.heritagetaxpros.com, or you can give our office a call. Our office number is 858-486-3800. Or you can email me directly. That one is pretty simple, Tiffany at heritagetaxpros.com.
I will definitely put all that information down below. I actually use her personally on my taxes. And as I always state to every single one of you guys who are viewing this, first of all, thank you. Be sure to like and subscribe, and you be great.